Let's welcome in our morning guest at this moment. Mayuresh Joshi is now with us. Gaurav Bisa is also joining in. Sumit Bagadia will just join us in a bit. Mayuresh, what are your picks for the day?
Morning, Pankaj. The markets have shown extreme amount of resilience. And again, I think just 4 days to go to the budget. Expectations are riding high in terms of what might come through, either in terms of tax reforms, tax breaks, and what might costly get meted out to the corporate sector as a whole. Keeping that in mind, my sense is that a lot of spending will probably happen on the infra side, as the markets are expecting that to on rural infra, and again more to do with how housing and power shapes up. So again, I think the trends that we're probably anticipating to come through the budget to probably give a guiding light to the Indian markets and expectations of Q1 FY18 proving to be some sort of a solace in terms of an uptick in corporate earnings, especially after the demonetization aftermath, and Q4 still remaining weak. Power ancillary as a space still remains extremely attractive to us. Stocks like Power Grid is something that we still remain extremely optimistic about, with the kind of capitalization in place for the company going forward, and 4 transmission lines expected to come up. The regulated ROE should hold up for Power Grid, even at 1.6 times price to book seems pretty reasonable at this point of time. At the same time, I think on the road side, the asset owners, the road developers selectively, IRP posted a brilliant set of numbers in my opinion. Order book remains extremely strong. Execution will be the key for these companies going forward, as well as debt levels for these companies needs to be monitored. But with cash flows improving both from the construction segment for a whole host of these road developers, my own sense is that road developers stroke EPC contractors as a space is something which remains extremely interesting as a budget play and as an earnings play as well over the next 4 to 6 weeks. Selective pharma is something that I've always liked. The approvals that Lupin is getting, and in the aftermath of Donald Trump's comments in terms of what might happen in terms of pricing for pharma companies, the exposure for Lupin is comparatively lesser compared to the other large cap pharma names. Again, earnings and top line growth is what we've assumed at a very conservative rate of 17%. And my own sense is with the kind of pipeline that Lupin has got, and with the management expectations of Gavis contributing from the first quarter of FY18, again I think EBITDA margin should hold up, as well as the earnings growth. EPS somewhere around 70 odd rupees. At the same time, also ancillary as a space looks very, very interesting. Maruti posted a reasonable set of numbers, but again I think four-wheelers as a space, Maruti, Tata Motors is something that I remain optimistic about. Auto ancillary should start picking up post Q3, Q4, and selectively there as well. I think companies like Bharat Forge should hold up, with Class 8 trucks showing some amount of lumpiness, but as the trend improves with this US economy improving, and with defense again being an integral part of Bharat Forge, I think that company should do well. So again, I think selectively is what we like in spaces going forward from a budget and an earnings perspective as well.
Right. Except for Power Grid, which you mentioned, any other names in within these sectors that you like, that you just spoke about?
So largely, again, I think if you're talking about power generators, I think the expectations of a positive and a favorable verdict coming through in terms of the coal pass-through, I think that probably comes through. I think you might see a re-rating in terms of earnings, but I think I'll wait for that verdict to come through and the proportion at which it comes through. But at this point of time, power transformers as a space is something that I've always spoken about. The kind of orders that these companies can get, the consolidation that we're probably seeing in the industry at this point of time, ROC is extremely low for a whole host of these companies, anywhere between 4 to 5%. EBITDA margins have actually come down over the last 2 years to 4 to 5%. There can be a significant expansion with orders flowing thick and fast for these companies with good IRRs, which basically means that margins should basically double over the next 2 to 3 years, which again means that the return ratio, specifically return on capital employed, should double very, very quickly and swiftly over the next 2 to 3 years as well, which will lead to earnings momentum as well. So a clutch of these power transformer makers, Pankaj, within the power ancillary space is something that I've remained optimistic about and continue to do so.
Right. Sumit Bagadia is also now joining us. Sumit, let's start with your picks as well.
Hi, good morning, Pankaj. Well, the first pick for the day is ACC. Yesterday we saw a very good uptick or up move in the counter, in which we had seen a move around 50 points from lower levels. Now immediately looking at the chart, it seems that from present levels we can see a good upside move in the counter, in which we can see levels of around 1450 or even 1470 in next 2-3 days time horizon. Immediately looking at the charts, I think one should initiate long positions at CMP, or if by chance there is a dip of 10-20 points from present levels, then that can be used as a buying opportunity with a small stop loss to be placed at 1365 levels on lower side for an immediate upside till 1450, and if 1450 is taken away, then we can see extended move till 1470 levels in next couple of days. Well, the second pick for the day is LIC Housing Finance. LIC Housing Finance is looking good on charts. Looking at the chart, it seems that we can see move till 570, 590 levels in next couple of days. So for a trading perspective, one can initiate long positions at 540, 545 levels with a small stop loss to be placed at 530 levels on lower side for an immediate upside till 570, and then we can see levels of around 592. The third pick for the day is Shriram Transport. Shriram Transport has given a breakout, and now it seems that the stock is headed for 1000 or above 1000 levels. Purely for a trading perspective, if anyone wants to initiate a position in Shriram Transport, then there should be on buy side. One can initiate long position in Shriram Transport at 945, 950 levels with a stop loss to be placed at 920 levels on lower side for an immediate upside till 990 levels. And if 990 is taken away on closing basis, then we can see an extended move till 1030 levels. So purely for a trading perspective for next couple of days, one can initiate long positions in Shriram Transport.
Alright, those are the picks that Sumit has. Gaurav, we've started a new series now. We will start new series. Where have you seen good additions? What are your top picks?
Good morning. My first recommendation will be buy on L&T Finance. We have seen consistent long positions, good amount of long rolls. 100 call option had very high concentration. It's closed above these levels. In all likelihood, it can test levels of 107 to 110 in next couple of weeks. One can have a small stop loss of 98 and go long. Secondly, buy on Maruti. We have seen recent short covering coming in, almost a breakout on daily charts with a stop loss of 5740. One can play for targets of 5900. If 5900 is crossed and sustained, expect another 3 to 4% up move in a very swift manner. Very cleverly positioned stock. So third would be buy on Canara Bank. Among the PSU banks, Canara Bank is one that is looking very promising. Good amount of long positions seen getting built. A lot of buying was seen in options data as well. With a stop loss of 275, one can go long for targets of 295.
Alright, so those are the picks coming in from Gaurav. Mayuresh, we've got a lot of earnings that came out, and a day earlier when the markets closed on expiry day, we saw a big move coming in Kotak Bank. What's your view on banks like Kotak and Axis?
So morning Anisha, I think again the corporate facing banks are going to feel the stress in Q3, Q4, and that was very evident in terms of how the recognition of the watch list has taken place. But again, our own sense is that post Q1, as credit growth starts picking up meaningfully from the higher single digits that we've seen for the industry as a whole, and with the kind of focus that these banks now have specifically to the retail side, where retail constitutes almost a significant portion of the retail advances, of the overall advances in the last 2 to 3 quarters. My own sense is that it should slowly and steadily start playing out in terms of the asset quality pressures coming down. Q4 will be equally worse in terms of recognition, both in terms of the watch list as well as fresh slippages coming through in terms of a few sectors. But in my opinion, again, I think Q4 will be the worst that we've probably seen for corporate facing retail private sector banks. Having said that, I think as credit costs start coming down from awfully high levels that we've witnessed for the better part of FY17, and as credit growth starts picking up, the leverage would start playing up on their balance sheet, which would clearly get reflected on their ROEs, which would probably remain at depressed levels for almost 4 to 6 quarters. So again, I think we remain optimistic on larger private sector bank. Kotak has posted a good set of numbers. So largely, again, I think larger private sector banks is something that I'll still be very optimistic about. But I also remain equally optimistic about the larger public sector space. The capital adequacy remains strong, and though you might see some amount of blip in terms of NIMs getting compressed a tad bit in terms of deposits that we've probably seen post demonetization drive, capital adequacy holds them in good stead as well. And largely, again, I think the industries that are feeling the stress in terms of metals, minings, real estate, as the stress starts coming down, the working capital constraints start coming down, which will also lead to an improvement for the larger public sector space, whereas the mid and small public sector banks still might have issues related to balance sheet growth because of capital advocacy. So selectively, I think I'll be optimistic on larger private sector and very, very selective within the larger public sector banks. But yes, I think remain optimistic on the financial space as a whole.
Right, Wipro declared numbers. GAIL has approved its bonus issue in the ratio of 1:1 and 2 nods coming in for Sun Pharma as well as Aurobindo Pharma. Both these companies will be in focus. We should start getting the first prizes anytime now. A lot of companies where the results would be reacted, a lot of order wins, a lot of buyback meets, buyback news coming in. So all of it is likely to be in focus. 8-point higher for the Nifty BHEL, 132 points higher. Now Nifty up about 12 odd points. HDFC Bank up about 0.5%. Infosys flat with a negative bias. ACC is up around 1% or so. HDFC Limited is up about 2 rupees. Dr. Reddy's 0.1% lower. This is an earnings impact for Wipro, 3 to 4 rupees down, 469. But I think it was already indicated in the pre-open session that this sort of opening can be expected. Ashok Leyland numbers were not that great. There was an adjustment about forex loss, which we have adjusted for when we showed the PAT. 2% higher. 88.5 as far as Ashok Leyland is concerned. Exide, good set of numbers after a long time, 1.4% higher. However, margins were slightly lower, but the top line growth, top line performance was on the higher side. VRL Logistics, not that good set of numbers, not that bad set of numbers, but still up around 1.5 to about 4 odd percent. Company reacting to numbers. IDFC Bank declared numbers where provisions were slightly higher, 5% decline, 62.63. Why it would be negative is because a lot of other private banks have not reported that bad set of numbers. Cholamandalam Investment, 1044, good set of numbers, 4,000 shares traded for Cholamandalam Finance. Oberoi Realty down about 1.5. I don't think it will react to numbers much. Numbers were broadly in line. Some of the other companies that declared numbers, Indiabull Real Estate, 2.5% on the higher side. So that's a company which has declared numbers. Blue Star is up close to about 4% or so, 535 now. Very, very strong set of numbers in terms of the volume growth that the company has shown. However, margins in unitary cooling were not that great. 7,000 shares already traded for Blue Star. Bharat Electric stocks in news, 0.6% higher. That's a company which has a board meet today. ABG Shipyard also has a board meet. It's up around 2.5, 3 odd percent. Some companies were order wins, so that's about 2% higher. 35,000 shares traded for the company. Very, very strong volumes as well. Dilip Buildcon up 3%, 245. Always it keeps getting order, but really never reacts to it on a big way. But today it's up 3% with very, very strong volumes. Emphasis has a board meet, and remember they have a lot of cash on their books, so that is something which will keep investors busy. 20,000 shares traded already. It's not a frequently traded counter. 4% higher. 561 for Emphasis. GAIL also has declared its bonus issue, so 492.93 for GAIL, and I think GAIL is now also among the top gainers on the street. So that is something which one would note. Sun Pharma, Aurobindo reacting on the positive side. They have declared they have got an approval for a drug, so that is something which these companies are reacting to. Anisha, any names on the volume side that you can pick up?
Well, take a look at IDFC and IDFC Bank. Both of those are down in the red today, and volume seems reasonably high there. So both these places we are seeing some pressure. GAIL has moved up very well. It's up 3.5% now. You mentioned the bonus issue and bonus meeting, and that stock is reacting well. Bajaj Hindustan is up 3%. We got REC doing very well, up nearly 3%. Exide has reacted well to its earnings, up 2.5%. Ashok Leyland, despite the disappointment in the third quarter earnings, is up nearly 2%, and DLF is also up 2%. So some of the PSU banks like Punjab National Bank and Bank of Baroda are also having a good run. Z is down about 2%. Indiabulls Real Estate is coming up from the lows of the day, and Bhushan Steels is down 5.5%. So these are a few stocks that are seeing some action. The frontline indices are having a good run. In fact, the Nifty is now up 1/4%. The Sensex is doing even better. We have gains of 0.5% coming up. So the market's just extending their gains and moving up higher. Mayuresh, do you see this as a pre-budget rally? Do you think it has more legs to go further if the budget is positive?
Possibly, Anish, and again I think the global cues have been extremely supportive at this point of time. So largely I think what is expected to come out of Trump and his policies thereof, largely I think the markets are taking that or factoring that in a significant way, unless he comes out with something which is absolutely anti-trade, and then I don't really know how the markets will react, and you will see a knee-jerk reaction if that happens in terms of anything constructive. But until that point of time, specifically I think with the global market rally that we've probably witnessed and are witnessing, Indian markets are not left behind as well. So yes, I think a large part of the moment has happened, and as expectations, as I mentioned earlier, are being laid out in terms of what the exchequer might deliver in terms of tax cuts and some leeways for the corporates, as well as GST expected to come through over the next few quarters as well. I think that poses a very interesting phase for the Indian markets. The recovery in terms of corporate earnings, as I've been mentioning time and again, might have got delayed, as well as the capex cycle, specifically on the Indian private side. But it's a matter of time. If the budget is extremely supportive in terms of the fiscal spending, specifically in terms of the planned expenditure, which I feel is going to be a reality going forward, as we are going to meet the fiscal targets, and with tax collections remaining extremely buoyant, specifically on the indirect tax side, I think that will give some amount of impetus in terms of both consumption as well as growth for the economy as a whole. So largely again, I think any sector which probably gets benefited from government moves, as I mentioned earlier, whether that be power, infra, selectively roads, road EPC, power ancillaries, will be the focus of the government. Rural financing, rural spending is also going to take a key aspect in terms of the exchequer's budget note. So I think any sectors which probably get impacted in terms of consumer staples, consumer financing on the rural side, which might get either tax breaks or get incentives probably for these sectors to move up. Fertilizers as a space, if DPT starts coming through in terms of fertilizers, something comes on the urea decontrol side on the government front, fertilizer as a space and selectively stocks within this space also look very, very interesting, Anisha, at this point of time.
Gaurav, United Spirits is at 2300. It's up 5% in the last 1 week. If I'm not wrong, it's already up 10%. Any view on United Spirits?
Well, we have seen good amount of long positions getting built, but sadly it has not been seeing good amount of traction sub 2250 levels. So yes, there can be some more upside from the current levels, but the kind of positions that we are seeing, I would not be too bullish. There can be a couple of percentage points from here, but risk was not favorable for fresh entry at these levels.
So right now it's in a no trade zone.
Yeah, right now I would wait for a dip. Beyond that, I would be buying.
Sumit, what would be your call on Bharat Finance? After results, it went up 10%. They had an analyst meet. It's up around 1.2% now.
Well, it's a breakout in Bharat Finance. Immediately looking at the charts, it's trading about 200 DMA2. I think the stock is headed for higher levels. Immediately, it has small resistance at around 760 levels or so. As soon as 760 is taken away, we will see a extended move in the counter, in which we can see levels of around 800 or even 850 in next couple of days. I think those who have taken long positions in last 2 or 3 days, they can hold on the existing positions with a trailing stop loss to be placed at around 720 levels on lower side, and on higher side immediately if 760 is taken away, then from there we will see a move of around 40 to 50 points. That means immediately we can see a move till 800, or after that we can see move till 850 also. So overall counter is looking strong. One can initiate fresh long positions above 760, and those who have taken long positions at lower levels, they can hold on their positions with a trailing stop loss to be placed at 720 levels on lower side.
Right. What do you think of Bajaj Finance, Sumit? Again, when Bharat Finance went up, all the other NBFCs also did very well that day.
Yes, absolutely right. See, most of the finance stocks are looking good to me. I think immediately looking at the Bajaj Finance, Bajaj Finance is also looking strong on charts, and it has given breakout above 1000 levels too. Now presently it's quoting at around 1010 levels. Looking at the chart, it seems that there is a possibility that we might see up move in the counter till 1040, 1050 levels, and if these levels are, and if those levels are taken away, then we can see extended rally till 1100 levels. So overall, for the targets of 1100, one can initiate fresh long positions in Bajaj Finance, and those who have taken long positions at lower levels, they can hold on the existing positions with a trailing stop loss to be placed at around 980 levels on lower side. 980 should be the stop loss for fresh long positions too.
Right. Mayuresh, as far as results are concerned, they are not as bad as the initial thought in the market was, that what could demonetization do. At least the initial few numbers are not looking that bad.
Oh yes, again I think numbers have been on a much better scale compared to what the analysts were pegging across sectors. For instance, I think housing finance companies, I think a lot of analysts on the street are a little skeptical in terms of how things will pan out. Similarly, for a lot of these microfinance, small payment bank companies where collections would have been a problem. And again, I think disbursements in such a scenario always remain very, very tight. But largely, yes, I think earnings have not disappointed so far. Again, I think what happens with capital goods, a few of the mid-cap PSU banks will be a different story altogether. But again, I think those industries are going through a tough time. Individually, I think demonetization might again trigger a little bit more in terms of how the top line might degrow for these companies. But largely, again, I think have a look at consumer staple stocks. I think the degrowth was not as sharp as one really expected to happen, and the fallout obviously has been that a lot of these NBFCs, housing finance companies, have moved up significantly. Similarly, in the case of consumer staples, FMCG companies, the volume degrowth has not been witnessing a sharp spike downwards. So largely, again, I think as demand starts coming back and as the economy gets remonetized, these sectors will obviously see a sharp recovery coming through in terms of their volumes as well. As pricing power starts coming back over the next few weeks and quarters, the input cost inflation that we're probably witnessing for a whole host of these sectors can be taken care of as well. So again, I think the point that I'm trying to make is that the readjustment might take place for a quarter or two, but I think the earnings momentum should definitely start picking up, and with the budget, as I'm expecting to lay a lot of emphasis in terms of support for both consumption as well as growth, the earnings recovery should start being very, very evident from Q1 or first half of FY18. Couple that up with capex coming back by the second half of FY18, I think the economy should be in good stead, unless something goes awfully wrong on the global scale, which nobody can predict at this point of time.
Right. Mayuresh, just when you answered about Axis Bank and private banking names, differentiation between corporate retail banks that you were just talking about. Axis Bank also, after the results lows, is up around 10% right now. It went to the levels of 440. Right now it's about 473. Do you think valuations will play a catch-up role if some of these banks like Yes Bank, some of the other industry leading banks continue to go up? Valuations cannot remain at a very big discount for Axis or ICICI versus some of these names?
Well, absolutely, I think that's the whole point that I'm trying to drive through, that a lot of these corporate-facing banks which have been facing the heat and stress in terms of their exposure specifically towards sectors like metals, minings, real estate, gems and jewelry, and the watch list that they've declared, the project provisioning that they've taken and the credit cost that they're incurring in terms of both the standard provisioning as well as provisioning coming through from slippages of the watch list have clearly played out on their balance sheet. Now, if you're expected to see an economy recovery happening by the first half of FY18, the credit growth should recover significantly for the banking sector as a whole. And with the point that these banks are driving, retail advances, as I mentioned again, for these corporate-facing banks have taken a huge amount of importance in terms of how their advances growth is expected to go forward. And again, largely, when you're talking about credit costs going down, I think the return on assets basically start improving from the base that we've seen in FY17. So yes, I think my own sense is that the commentary of these bankers are suggesting that Q4 might be the worst in terms of how the asset quality will play out. And as the economy improves, that their balance sheet strength improves as well significantly over an year-on-year basis. So largely, again, as I mentioned again, FY18 should be a good start in terms of earnings recovery for these corporate-facing banks, and the worst, in my opinion, should largely be over by Q4.
Thank you so much, gentlemen, for joining us this morning. Just before we go, let's start with you, Sumit. What are the disclosures?
See, the trading calls which you have discussed on NDTV profit, the same calls we have given to our clients also. So it's better to assume that our clients might have position on the stocks which you have discussed on NDTV profit. Thank you very much, Pankaj.
Gaurav, disclosures for you?
No personal holdings in the stocks discussed today. It is possible that we may have recovered into our clients at LKP.
Mayuresh, finally for you. Pankaj, no personal holdings in any of the stocks discussed, but it is possible we've discussed this with our clients and we may be holding these stocks on behalf of our clients and our funds.
Thank you so much, gentlemen, for taking out time for us. Always good to get in a perspective. Nifty is at the day's high, 8,644. Taking a break. Our first after opening, coming back in 2 minutes.